What's up guys, Taiki here, and in this video I'll be going over reflexivity and memes in crypto. If you like the content, please like and subscribe and leave a comment in the comment section below. So let's get started. The goal of this video is to share some, insights from thought leaders in this space. From these folks here, Matti, who is the author of the essay I'm gonna share, is a partner at Z Prime, a crypto VC. Hasu is an independent crypto researcher, as well as Su Zhu, a CEO and CIO of Three Arrows Capital. And namely, I'll be going over this article that was written by Matti on November 3rd, 2020 on reflexivity and imitation. I learned a lot from this article, and I want to share my commentary along with some key insights that I learned with you. And if you're like me, I usually don't like reading long essays, and you probably would rather have someone like me tell you about it instead. So, I've gone over the troubles to basically consolidate the key insights and share with you what I think is important. So first, Matti begins the essay saying that, this essay aspires to introduce the reader to a couple of philosophical frameworks in a playful way, offering a different analysis of the current market situation. This is really important because, the crypto markets is affected by market psychology, right? Like sentiment is really, really important, and you should and it's important to think about what's driving random price movements when certain cryptos go on this parabola and then dumps 50%. It's because crypto markets are fueled by emotion. People get really excited about a project, and people pay whatever they can to ride the hype, and then the smart money dumps on them, or even the developers, right? If it's a Ponzi or whatever. And anyways, let's focus more on this article, which was really thoughtfully written by Matti. But let's go over the theory of reflexivity. If you don't know what reflexivity is, it basically states that investors don't base their decisions on reality, but rather their perceptions of reality instead. And this leads to a virtuous cycle where a change in price leads to a change in perception, and a change in perception leads to the justification of fundamentals, and that justification of fundamentals leads to a change in price. So let's go over some examples of how this works. So when you see the Ethereum logo, right, do you see a pre-mined scam from this Russian dude from named Vitalik Buterin, or do you see a world computer, the future of finance? Well, it depends, right? Like when the price of Ethereum starts going up, it's like, oh, Ethereum, it's going up again. Like what the hell? Oh wait, more people are using it, and there's demand for transactions on the Ethereum blockchain. Maybe this is the future of finance. Oh wow, there's so much you can do on Ethereum. And this is the virtuous cycle and the reflexivity theory that George Soros talks about. And obviously this applies to Bitcoin, where then right here, do you see a pyramid scheme, digital gold, or an alternative monetary system? So let's dig deeper on how reflexivity works with Bitcoin. So looking at this chart here, obviously as numbers go up, people start to learn about it more, right? Oh, Bitcoin's back. Like I thought it was a fad in 2017 after it crashed. Now, random celebrities like Lindsay Lohan is tweeting about it. It's on CNN, CNBC, Fox News, whatever. Well, more people learn about it. And as more people learn about it, they're gonna learn, they're gonna watch YouTube videos like mine, they're gonna read articles, and think to themselves, is Bitcoin digital gold? Wow, it's $1 trillion asset. Maybe this is, maybe boomers might not own it, but Zoomers will. And in 20 years, we're going to throw away gold, but buy Bitcoin, right? And as people start to, ask those questions, they're going to look at, oh my God, there's only 12 million Bitcoin. It's completely decentralized. And oh yeah, it can totally replace gold, 500K price target. And that's going to keep pumping the price up as random analysts from random banks and random YouTubers start to say Bitcoin to 1 million by 2021, whatever. Right, and this is a way to consolidate this kind of cycle. On the left hand side, you see this virtuous cycle of price going up, but it can also go on the way down, right? If Bitcoin were to dump 50% or 50% or more, then people will write Bitcoin off as a fad. It's a Ponzi scheme, right? I knew it would fail. There was no way that this random dude named Satoshi Nakamoto could meme a currency out of thin air. And that's a summary of reflexivity theory, and that's one of the reasons crypto tends to have these boom and bust cycles where price goes on a parabolic ride to insane levels, and as people start dumping, then crypto crashes 80-90%. Now let's go over memes and mimetic theory. So Jeff Bezos defines a property of information that has a high virality potential as something that removes nuance, and also something that adds emotion. And this is basically defining memes, right? Memes are basically marketing tools that spread information in a symbolic way. Often memes are really funny, with something that we can relate with, and something that we're gonna share with our friends. We're gonna tag people, we're gonna retweet, and we're gonna spread information around. And as we spread information around, more people will become aware of a meme, and ultimately memes influences investor behavior. So let's take a look at money printer Gilbert, right? Like, we all love this meme. Bitcoiners like retweet this thing every single day, like copy and paste every single week, etc. Well, let's like dig deeper into this meme. So obviously, there's a Federal Reserve right there. Whenever they see the markets go down, they're gonna print money. They're gonna print money to save the markets, and until like every 10 years they're gonna do this, right? Like, it's kind of ridiculous, but that's kind of how markets work. Old people in DC print money, US dollar turns into toilet paper, and like this means that they're destroying our wealth. The money in your checking account is becoming worthless over time. You're becoming poor if you don't own assets. What do? Buy Bitcoin. That's how you do it. That's how that's how you save your wealth. That's how you don't have these like corrupt government officials destroy our livelihood. And if you think about the Jeff Bezos framework of like something that goes viral, the first 2 points, it's reducing nuisance, right? Like, obviously monetary policy is really complicated. There are like Jerome Powell and his team is like thinking really, really deeply about like how to conduct monetary policy, looking at unemployment numbers, looking at inflation, looking at the DXY relative to other currencies. It's really complicated. But at the end of the day, it's old people printing money in DC, and the dollar turns worthless over time, right? If you're trying to explain this to like, if you're actually trying to explain what happens behind the scenes to like some random TikToker, like, you'd rather just use like this explanation instead. And obviously, like, this leads to the third point of they're destroying our wealth, right? It adds emotion, and there's truth to that. There's a reason housing prices and stocks always goes up, and there's a reason why 100 years ago you could buy a loaf of bread for like 5 cents or whatever. And ultimately, how do you preserve your wealth? You just buy Bitcoin. And leading to this and combining reflexivity and memes together, human desire is born out of the idea that other people around them also desire the asset, which becomes reflexive. And with Bitcoin, it's really interesting because the price is often the meme, right? As the number go up, people start to ponder, like, maybe this is a real thing. Maybe like it's not gonna go to zero. And as people start to think about like what the hell Bitcoin is and why it's getting so popular, people start to see their friends and people around them buy Bitcoin, and that also increases demand. All my friends are buying Bitcoin. Everyone I respect buys Bitcoin. Elon Musk bought Bitcoin. Maybe I should buy Bitcoin too. And this is a funny illustration of mimetic theory, where there's a guy like Peter Schiff, like a perma bear, that says Bitcoin's a Ponzi, and maybe he's right the first time when Bitcoin went to 20K and dumped to 3K. But as Bitcoin gets to 6 figures and it keeps the demand keeps going up, people will start to take notice. And at the end of the day, you can't be a perma bear forever. When the asset keeps going up, you're gonna have to capitulate and just say, you know what, I'm gonna buy more Bitcoin. I'm gonna stack sats. Obviously, like, Peter Schiff isn't gonna do this, right? He's a perma bear. That's his personal brand. But if you think about like random hedge fund managers, like those boomers, like 60-year-olds that on CNBC saying Bitcoin is not gonna end well, at some point they're gonna have to basically admit that they're wrong and be like, you know what, I decided to invest 1% of my client's portfolio into Bitcoin because it's an inflationary hedge asset and it has an asymmetric risk reward. Yada yada yada. And this was a really cool quote that I saw where the mind tells markets how to move, but the markets tell the mind what's desirable. And it's the reflexivity and memes are so integral to why Bitcoin and other crypto assets have garnered so much demand in the past 12 months. And it also applies to Ethereum too. And it also makes you think about like how narratives affect the crypto space, where with Ethereum recently this narrative is starting to pop out that ETH is dead, right? Because gas is too high. It's not scalable. ETH is dead. Like no one's using ETH. Like no one can use ETH. Obviously, this is false, right? Because the gas is high because there's so much demand on ETH, right? So many people around the world want to get transactions done on Ethereum. That's why gas is so high. But it also doesn't scale if gas is also like super, super high. Obviously, the team's working on this. There's like layer 2 solutions, etc. But this narrative is why some other crypto assets like BNB on Binance Smart Chain, Solana, Polkadot, Cardano, they're mooning because this narrative exists that ETH is not scalable. So if ETH is not scalable, and we believe in crypto, maybe Cardano, maybe people will go to Cardano, maybe people go to Polkadot, etc., etc. This whole narrative that ETH is dead, like most likely false, but it gets people to invest and speculate in other assets because we simply do not know. In summary, it's all about the narrative, right? It's all about the narrative. People are going to invest in whatever they think has value and whatever they think they're going to pump because crypto is so speculative. Like no one knows what's going to happen. Like 10 years from now, like the top 10 coins outside of Bitcoin might be totally different. So we're simply speculating on what we know today. And what we know today is simply, it's really affected by like the people we follow, the random YouTubers we watch, and whatever we see on the news. And ultimately, the market is what others see the market as. This is really important because with memes, the money printer go burr meme is so important because it's so simple to understand, right? Like money printer go burr, dollar turns into toilet paper, buy Bitcoin. With Ethereum, it's a little more complicated. It's a world computer, decentralized finance, it's peer-to-peer money. We're removing financial intermediaries. It's harder to wrap our heads around. So maybe it's harder for Ethereum to go up. And for assets like Keeper DAO, which I'm really bullish on, like it took me like 2-3 weeks to fully understand what Keeper DAO is. And now that I understand it, I'm pretty bullish. But I also have to understand that it's also going to take other people to spend 2-3 weeks to fully understand it and buy into the asset. So, you can, and this is why like riding the hype train sometimes works, right? Like something Binance Smart Chain, it's so much hype, Pancake Swap goes to the moon, Berry goes to the moon, BNB goes to the moon, and it's riding a hype train. It's one type of investing, but I like to stick to fundamentals and what I believe in, which is Bitcoin, Ethereum, and DeFi on Ethereum. I don't like to go to other chains, but that's my thoughts. But I thought it was really interesting about how memes and reflexivity really play a role in crypto. And if you'd like to follow, Matti, Hasu, and Su Zhu, here are their Twitter handles. I think they're fantastic figures. It's cool that these anonymous figures have a really big following in crypto. People don't really your background has less merit. It's like what you say has more merit, if that makes sense. And these pseudonymous characters in crypto are really interesting follows because they're really honest. Like there's nothing holding them back. So that's the end of the video. Let's sit on our Giga Chat brains and think about it. And happy investing and have a great day.